Good morning. How you all doing? Okay, let's see what today will bring. And we got a correction bar yesterday. Starting to wonder what are those? Will we ever see another one? And pretty big one on the NASDAQ futures. Things were soaring, they look great. And all of a sudden, the sky was falling. And we got a big topping tail red candle that broke a prior day's low. Charts. What the hell is with me with these charts? I mean, like I'm hogging them for myself here. Good morning, everybody on YouTube. There we go. Charts are up. All right. So we got this big red candle there, ominous looking. What's one bar? What's the good and the bad? Well, the bad is the size of it and the fact that it took out these highs and it got rejected. Is it unusual? I think not. We were looking for a possible turn. And one of the things we talked about is that you need to break at least a prior day's low to even consider anything as a turn. And that wasn't happening until yesterday. Now, we do have a slowing in momentum. And how do we determine that? Well, this was a nice momentum move right there. Let's make that a little thicker. And that was even a better nice momentum move. Then we talked about the shallow pullback, and the momentum here is not as great as it was here. So we look at the distance between the highs and we see it's narrower. So momentum is slowing down. What do we do with that? Just recognize it as it is, that momentum slowed. Still doesn't change the trend. The good thing is that at least this momentum was great enough to put a reasonable distance away from major support, which is this low. So even though this is a big, potent red candle, if this is going to continue to move higher, we don't know if it will, the downside should be relatively limited. Whereas we could get a red bar ignored, which would be pretty bullish because of the size of that bar to see this turn around. Now, we have an objective step-by-step method. You have to stay in the lower half over here and rattle around. So we see it stabilizing here today. And we've got some support right there. Those overlapping opens and closes, which we should see that right here, which we do. This little clustered area right there. So those overlapping opens and closes, when you see that on your higher time frame, you know that there's going to be some kind of a base in a smaller time frame. And as we always do, we look to the left, and that's where buyers were before. That's where they should be again. Then we wait to see what's happening, and we see the stabilization that's been happening. It's, we got a range expansion, bottoming tail bar, so that's a good sign, and at least in the short term. And the 5-minute chart has been improving. We see it now. It broke the downtrend on the 5-minute chart. Now, when we talk about slowing momentum, look at what happened here. Big, nice momentum move. And immediately it takes out the high, momentum stalls. So we've got, not such a great situation here as far as, hey, let's play whatever counter trend here can happen intraday, because momentum slowed right away. Maybe it's pre-market, but looks like we're going to, be seeing some choppy action here for a bit. Rose asked me 387 on the Qs. Let's clean up the chart and look at those. Looks and it looks a little more nasty on the Qs than it did on the futures, because the futures obviously have the 24-hour chart. So 387 down here. Well, it really shouldn't go down there, McGraw. because that would be below major support. Now, would it violate the weekly trend? No, but it would if it closed down below there. So look, from the bullish point of view, it should never get down there. It should stabilize somewhere in here. Even though this is a big red candle, this is in an uptrend. Momentum stalled. It came down in a nasty way. And so maybe, I don't know, a lot of open interest in 390. Okay, well, one thing that we've seen, McGraw, since we've had this open interest over the last year or so, when you first started, I mean, I've always looked at open interest as far as possibly pinning and whatever at expiration and all that. But as you have discussed this more in the green room, one of the things I said to you almost from the beginning, I said, somebody's looking at a chart here. And lo and behold, as I got to know the Gamma guys better, which very nice people, they really weren't much of chartists. They look at some charts, but they don't really, not on the level that we do. So it was very interesting how these option traders are accumulating right in areas where we would look at those areas as a chartist at being a pivot low or an area of congestion. So it's all pretty interesting how two methods can come to a similar location as a focal point. So look, this is what we call minor support. This is what we call major support. Minor is the high that was overcome within the uptrend. And now the distance above that, it didn't get very far above it. So what we like to see is in an uptrend that prices can overcome that minor support or that prior high with some authority, if you will, get further above so that when it does start to pull back, it can hold that area. Now, we say it's subjective because it's beyond what's directly to the left. But as I showed on the futures, these overlapping opens and closes here are where first support is, and where buyers should begin to step up right there, which is around 398 or so. Now, the way it came down, it would suggest it's going to go through it, but that's the first level where some buyers will show up, and we see that happening in the futures. But we'll see how it plays out. All right. Maybe it goes down to the 20 MA. But we don't know. It's in an uptrend. It's going to take a lot to violate the uptrend. So intraday shorts, this could go down lower. We could be looking for some intraday shorts, sure. And just looking at how it's trading here, looks pretty anemic as far as trying to make a bounce. S&Ps, not too bad. Already bounced, hit the 20 MA. Anything lined up with that 20 MA? No, just the top of that congestion area. Kind of dipped into it a little bit and popped back up, but the way this came down, the power of this came down, and here's the rub, in a sense, like with wide range bars, they are power bars because the selling was so intense that it never was able to go sideways, overlapping opens and closes, nothing. It just collapsed. And so now it's begun to stabilize, and as it begins resistance area, which we can see pivot high, can it get above that? Now, it would probably take a little more sideways price action, but power bars are what I call the weakest link because there's nothing to stop prices from going up through them. What has to happen is that sellers have to be aggressive enough to create resistance. And so they've initially done that here. And now as we retest this, we'll see if this begins to roll back over again. This being a bottoming tail bar right now is meaningless. It's just the beginning of the day. So we see, does this go back down? Does it close down here? So we call bar by bar analysis. Right? We in an uptrend, we see momentum is slowed. We see a big, powerful topping tail bar because it's a range expansion bar. It's broken some support. We know the trend now is in question, and We'll see how today progresses. Right? The deeper it goes down here, right, the more the trend is in question. And if it closes below here, it's then violated the uptrend, but not on the weekly. M2K, the Russell. Now, this is the one, right, that should stabilize first, but better do it, like start doing it today. And you see it's got the biggest tail bar, but has not overcome any on the hourly time frame. Maybe this comes down and retests. So let's assume that we get some selling here at the open and it comes down and retests. This could be the go-to contract. But look, this has already retraced more than it should have, but it's on this support, the 50 MA here. We've talked about the fact that we've got this base that it's a whole damn year and a wide range bar. And this is a good example of the power bar being the weakest link. Right? This is multiple bars, but you can see it's one big bar on the weekly time frame, which created a void. These overlapping opens and closes, a little bit of support right there. And scrunch that up a little bit just to show you the concept. Right here, see it right there? There's so this is how you recognize where there's some support, where you're looking at a particular time frame, and closes, there's going to be some support. So now the depth of retracement here is getting too deep. Well, downtrend on the hourly. If this can begin to stabilize, it could have the potential to have the biggest move, but it's got to stabilize here. And usually this kind of retracement, the best thing is for it to take, 2 or 3 days to bottom out, as this hourly chart then begins to move sideways away from all of these reference points. The closer you are to reference point, the greater the potential for choppy price action. So it's really common sense. But look, there's so much mumbo jumbo out there about how to look at charts with all the different indicator methodology. It's hard to make sense. But when you look at it through price action, the way I'm explaining it, right, light bulb moments happen. And because when you hear the way we explain things in Master Trader Live, which we'll be doing one tomorrow, people are saying, wow, this stuff is not so complicated. I can get that. I can look to the left. I don't need any proprietary indicators. I know what a void is and patterns and so on. It just takes a little while to get accustomed to reading all that stuff. So look, the Dow has come all the way back down to the prior pivot low. So it's been the weaker. And look at the structure here. Is that it's just got, while it's come down to a support level, it's got 3 days of slop before it breaks here. Now, how much of that significant to us as day traders? Not much. And this is a downside shakeout. So when we start looking, and everybody says, well, what about that area over there to the left, Greg? And I'm like, well, let's look at it from this point of view. How significant is this bar after prices traded above it and back below it? In reality, all of that is meaningless. This is what's meaningful. And can prices get through here, which is where they're at right now? Can they get through there? Now, I'd like to see it. If I could get this bottoming tail bar and drag it over here next to the edge that it reached it, I'd go long, looking for it to go up into the void. We'll see. Silver, right back down again, wide range bar here on the hourly. It's probably going to start to stabilize at this point. It is at support, but wide range bar exhausting the move. Gold, Another disappointment, right back down to the 200 here, but got a nice reversal. We'll see if that can start to repair the damage. We looked at this yesterday, showed you the XLE and OIH, coming back down here. And looks lower at this point, right? It couldn't hold the 50, and it's broken lower. Bitcoin, a little stabilization on support at the 50 MA. So widely followed moving average and an area of congestion right there lined up together. We got two reference points lined up there. And the transports, holding up. We got some of the airlines showing some stabilization. We put our toes in the water here yesterday, considering these are down at some major support there. So we'll see how it plays out. Was yesterday's late day fall related to any time for a retrade? Well, the timing was right, Deepak. I think I saw on some website that there was some big gold sale that happened yesterday. I don't know why that would affect equities much, but it just, once it got rolling, it just seemed to, things were so strong. It happens that way, where things were just so strong, and then the selling begins. Look, we knew the risk was increasing. Internals just terrible, with the breadth deteriorating as it was going up, sentiment up here, and correction bars happen. And it's a normal part of what happens in trading. So this is a big ugly one. We'll see how far it goes. All yours, Dan.
Good morning. All right, our opens are fine. We have a potential nice gift. I'm seeing a pre-market print down on Charter, down $14, but I don't see any prints. So I can't trust it. But if it is doing that, then we're definitely going to be taking half at the open. But we've been in this sell setup for a while. We started adding some call spreads yesterday with the turn. Yeah, that was, I mentioned I was at the gym and we had such a strong morning. And then at the gym, I saw it down negative 163. I'm like, wow, what happened there? But yeah, we've been talking about this M top. Usually M tops do not form like this. This was a bullish continuation breakout from bullish consolidation. So that is not an ideal M top at all, but it's a shock bar. And tomorrow, MT Live, we'll be talking about directional option trading, buying calls and puts for bull and bear. The week after, we'll be talking about shock patterns. And this, that bar definitely counts as that. All right, any other questions on opens, just ask. Otherwise, they look fine. Greg yesterday mentioned Kroger. Defensive, that's still holding up well. BR.B or BF.B is on the list of 1, 2, 3. John's talking about NXPI. Yeah, John, NXPI yesterday. And say, Greg, we gotta talk about refining this in our rules, because we had to stop under 220 under this big old base on a put spread. But when we get a fluid move down like this, we let it pivot, because this is a horrible stop, horrible place to get out. So I would play it by ear. 30-minute low, but yeah, yesterday's low for sure. IQV is it's not a 1, 2, 3. because these bars are above this one, but nevertheless, and that's why Greg's swing trading course teaches you how to read price action. It is a 1, 2, 3 on the weekly, but on the daily, it's bullish price action. Just keep it on the list. That would be a fantastic 1, 2, 3 if we get an inside bar today. So that also is going on the list. Very nice. Someone's asking us, Riven has room to fall. No, it's a, it's a fluid move down. It's unless you're just day trading, I would stay away from that, from swing trading right now. All right, let me go to my list here. Genie gapping up to 1430. This is a climactic buy setup, 30-minute high. All right, so 30-minute high, day trade there. Valet here, I see the gap up and it's still in a downtrend, but I looked at the monthly. It's in an area where it should turn. And after our shock pattern MT live, we're going to be talking about topping and bottoming patterns. And they start on a smaller time frame. This could be the very early start of a bottoming pattern that I want to keep an eye on. MOD, that's just a big mess that I have zero interest in that pattern. Yeah, the airlines, we got into 2 put spreads yesterday. LUV is interesting because this has, of the airlines, this has the most potent 2 green bars, and it's bullish on the 15. So I looked at a couple of the leisure reopening trades, and I mentioned to Greg, look how similar the following 3 hotels look. It took out a prior low, but they're all at the 50 and they're trying to make the turn. This wasn't, today is Tuesday, so Friday, that was an ugly red bar at the low and it snapped back. Hilton, look at this big range expansion bar. Closed right back in there, filled the gap. And you got a price void. When we do the MT live on the turn, TURN, that's exactly what's going on here, the turn. Hyatt, same. So I kind of like Hilton the best of these 3. So I'm going to keep an eye on this. Charter, we mentioned. Keys at earnings, no pattern, possible call spread for Friday. Oh, I posted Dollar Tree as a call spread. It was a bearish gap down. It's rallying here a little bit, but under 5-minute low. I want to do an out of the money call spread. XPEV also. It's in a trading range, kind of a little bit of a reverse head and shoulders, head, left shoulder, right shoulder. It had earnings. It's gapping up to the tight end of the range. But if it didn't, it's consolidating at resistance with a price void. If it can break out, I think target 55 to 60. So I'm keeping an eye on that. Alpha, we actually traded this as a 180 gap reversal, and we took our money because it had earnings. Now, wow, now that's a nasty gap. Look at that, gapping under. So we'll keep an eye on that for a call spread. I read something that MasterCard, Visa, American Express, they were getting, part of the reason they've been getting whacked is legislation, I don't know, hurting them a little more, because look at AXP is getting hurt a lot more than XLF, which bounced the other day. But MA, we'll keep an eye on it. This could be getting close to a wide range ending bar, greater than 100% retracement. So I'll keep an eye on it. All right, I don't like the way Dollar Tree is rallying here, so I am going to tell our subscribers just to hold off because I need more information than a 5-minute low. Okay. Still might do it, but maybe we do a 30-minute low. But I don't want to rush into it. So just because of the gap being filled now. MOV, light volume, extended short term, but weekly, monthly look higher. We'll come back to you. Road. I see one print. We'll come back. Smuckers 130, gapping. It's a gap breakout, but gap, big gap. Titan, strong, but no pattern. Burl 270. We'll come back to you. ANF would have been a nice pattern if it could have continued here. Now it's getting whacked way down here. So that's damaged goods. Looking at that gives me a headache, so I'm deleting you. Delta Yankee. Now this I like. Look, gapping up to 87. That's over this red bar. So that looks good. I'm going to put that in a window. Delta Yankee. That's one of the best gap trades I've seen so far this morning. Wow, this is the specialist is slow. It's still not printing over the high. Zoom.
Good long gap trade, but if it isn't trading yet, it may not be liquid enough.
Right. David, I don't know what you want me to do with that. It had earnings. It's nasty, but there's to me, nothing's jumping out.
Whipsaw here, first minutes. Market's headed down and whip right back up again.
Okay, no pattern. Yeah, see Dollar Tree? See that? See why I canceled it? Because it negated the morning gap down. DKS looks horrible. That'd be a call spread.